Welcome to my channel, say guys, Academy, and today we are going to deal with very important topic, that is due diligence, investigation, and forensic audit. It is very important from our exam point of view. We have to have a concept clarity on the three matters. Many CA Final students get confused between due diligence, investigation, forensic audit because all three involve checking documents, analyzing transactions, and asking questions. But ICAI expects you to understand why the work is being done more than how the work is done. That is the real key. Okay. Simple one line difference between the three. Let's under the concept or main objective. Due diligence to evaluate before taking a business decision, investigation to find truth about a specific matter, and when we speak of forensic audit, to detect and prove fraud with legal evidence. Now let's do one by one. Due diligence, meaning due diligence means reasonable care taken before entering into a major decision, usually done before merger, acquisition, investment, takeover, joint venture, lending. The buyer wants to know what exactly I am getting into. This is a work of due diligence. Suppose you want to buy a second-hand car. Before purchasing, you check the engine condition, the accident history of the car, RC papers, insurance, mileage, right? Why? Because after purchase, loss becomes your problem. That's checking process is similar to due diligence in business. Okay. Now take an example of corporate. Tata Group wants to acquire a startup. Before acquisition, professionals would examine the financial statements, the pending lawsuits, tax defaults, hidden liabilities, employee disputes, compliance issues. These examinations is for due diligence. Objectives of due diligence. Why do we do due diligence? Identify risk, hidden liabilities, to see what type of control is there, whether it is weak control or not, legal exposure, financial health, future profitability. Different types of due diligence. Financial due diligence, checking profitability, cash flows, debts, EBITDA, that is earning before interest and tax. Okay. Working capital, example, company shows rupees 50 crore profit, but due diligence reveals huge receivables are doubtful, inventories overvalued. Actual value becomes much lower. Second is legal due diligence, checking court cases, okay, regulatory penalties, contracts, licenses. Example we can take here, a manufacturing company is operating without environmental clearance. Huge future penalties may arise. Third is tax due diligence. Checking. What we have to check here for tax due diligence? GST defaults, income tax litigations are there or not, TDS non-compliance. Example, target company has unpaid GST demand of rupees 20 crores. Buyer must know this before acquisition. Fourth is operational due diligence, checking efficiency, production process which is being used in this company, internal controls, supply chain. Okay. Then fifth, we have HR due diligence, checking employee disputes, labor law compliance, salary obligations, then attritions. Okay, these are the 5 types of due diligence. Now we have due diligence as a forward-looking, decision-oriented, risk assessment focused. It is not primarily fraud detection. Then the second part we have to know is investigation. What does investigation mean? Investigation means detailed examination to discover truth regarding a specific matter. Unlike audit, investigation is not routine. It has a specific objective. Suppose cash is missing from office. Now what do you have to do? Management asks, who took it? Right? How much was stolen? Since when it is stolen? How was control bypassed? This targeted examination is investigation. Like key features of investigation, audit gives reasonable assurance. Investigation tries to establish exact facts of truth. Purpose of investigation, suspected fraud. Example, fake vendors created, money shipment off. Second, business purchase. Before buying business, investor may conduct investigation. Third, loan requirements. Bank investigates financial credibility, repayment capacity before sanctioning loan to any particular client. Employee misconduct. Example, expense reimbursement fraud, misappropriation. Example, a company sales suddenly increased by 300%. Investigator discovers fake invoices issued at year end. Goods never dispatched, hence profit were manipulated. This is an investigation assignment. Now, what is the difference between audit and investigation? That we have to understand so that we can have a clear idea about the two. Basis of audit, that you can say objective audit is to give opinion on true and fair view, whereas investigation find the truth. Scope of audit is general, whereas scope of Investigation is specific. Then period of audit is usually 1 year, but for investigation is any period. Mandatory, often statutory in case of audit, and optional for case of investigation. Depth of audit is always test checking, whereas it for investigation is detailed checking. Okay. Now, focus of audit is on reliability of statements, whereas of investigation is a particular issue. Forensic audit is the third part we have to know. Meaning, what does forensic audit mean? Forensic audit means examination of financial records, detect fraud, and produce evidence suitable for court or legal proceedings. The word forensic means suitable for use in court. Let's understand in simple ways. Investigation asks, did fraud happen? Forensic audit asks, can we prove it legally? That is the major difference between forensic audit and investigation. Suppose an employee transfers company money into personal accounts. Forensic auditor will take trace bank entries, recover deleted emails, examine digital trails, preserve evidence, identify beneficiaries, prepare legally admissible report. Because matter may go to police, court, CBI, ED, everywhere. So it has to be such that it can be presented to the court. Objective of forensic audit: detect fraud. Example: if there are fake payments, payroll fraud, vendor fraud. Okay. Second, quantify loss. How much money was stolen? Identify culprits. Third, who committed the fraud? Fourth, collect legal evidence. Evidence should stand in court. Fifth, prevent future frauds. Recommend stronger controls. Okay. Examples of forensic audit. Example 1. Fake vendor fraud. Accounts manager trades fake supplier companies. Payment transfer to personal relatives. Forensic audit detects what does it take? Same bank account linkage, same IP addresses, fake GST registration. Example 2. Financial statements manipulation. Management inflates revenue before IPO. Forensic auditor examine email trails, side arrangements, side agreements, backdated invoices. Example 3. Cyber fraud. Hackers divert customers' payments. Forensic team analyzes server logs, digital footprints, transaction trails. Techniques. What are the techniques which are used in forensic audit? That is data analytics. Finding unusual patterns. Example, we can say same invoice amount repeatedly. Digital forensics, recovering detailed data. Third, background verification, checking employee vendor history. Fourth, bank trail analysis, tracing fund movement. Fifth, surprise tracking, physical verification. Important. This is very important from our point of view of examination, because the difference between due diligence, investigation, and forensic audit is very important, and we have to find fact-finding exercise. Okay? When we go for, let's understand in this way, when we say about due diligence, it means taking decision. Before taking a decision, I stands for inquiry, investigation, F for fraud case, forensic audit. So practical ICAI style case, let's do a case study to understand the case more better. Infosys plans to acquire software startup. Before acquisition, financial health checked, right? Legal liabilities reviewed, tax disputes analyzed, due diligence after acquisition, management. Suspects revenue was stated, special examination initiated, investigation, and further evidence collected, fake contract, email manipulation, digital alterations, matter likely to go to court. Then we go for forensic audit. Okay. So for examination, let's take a tip. Why is the assignment being performed? That is what first we have to answer in any case. That alone helps you distinguish due diligence, investigation, or forensic audit. Let's final conclusion. Let's say before taking any decision, due diligence is done. When doubt arises, investigation is done. When fraud must be legally proved, forensic audit comes into play. This is the conceptuality of the due diligence, investigation, and forensic audit. Thank you. Hope the point is clear.